All right.
TJ the Wheel Joe coming at you live with my boy, my friend Option. How are you?
I'm good, man. How you doing?
I'm good, man. StreamYard's got this little thing now where I can see the comments on the corner of the screen here. So
Oh yeah.
whenever I go and show the portfolio,
Uh-huh.
I lose my comment section.
Okay.
Now I'm going to be able to see the
See it
comments. So
right
I'll be
there.
able to. I think it's going to be more interactive now because I'll be able to see if there's anything that somebody's maybe confused on or they want me to like
Yeah.
elaborate on or whatever. So
You can just
by all means, come with those comments now because I'm seeing them out of the corner of my eye now. Whereas
yeah.
before it's been blind, right? I'm just talking to the screen.
hmm
So StreamYard getting better, bro. I think these streams are about to get I think they're going to about to get real good because it could be a lot more interactive. Because the best time to answer the question is whenever it pops up, whenever I'm in the middle of the presentation, if you will.
Mm. Yeah,
So
I can see him too.
yeah, it's sweet now, right? We didn't have those before.
Nah.
We didn't have those before. I could see them like on my TV screen over there.
Oh yeah, you can see. Okay.
But I'm like, dude, this is too much, bro. I'm like,
Yeah.
I can't walk and chew gum. You know what I'm saying?
Yeah, right.
Dude, Yankee Doodle, congratulations, man. That is awesome. What's going on, Stefan? Mr. G, what is going on? Apples falling from heaven. Can you join? I'll put the link up here in a bit. Give us about 20 minutes or so, BR Baller. You can pitch us on Lululemon, how you still believe she's the one that you're going to marry. Wow, good for you, Rambler. What's going on? What's the bare minimum I have to have in cash to do the wheel? Man, I've seen people do it with like 4 or 5 grand.
Yeah.
I think that the number that you always want to shoot for though is $25,000 and a little bit more so that you don't have to deal with the pattern day trader issues. Because if you see in a situation for like cash grab and all that stuff, you go in and out, you do that 3 times a week, they flag your account, right? So if whenever your account's less than 25,000. So I say that if you want to get into this game, 25,000 is kind of like the North Star initially.
Yeah.
Like you need to get you need to try to get that account to 25,000 by hook or crook. And obviously I had money in my 401k whenever I got in this game, but I didn't start with 25,000. I put like 2, 3, 4, 5,000 in, right? Incrementally. When I was transitioning out of the oil field, I was driving Uber, I was driving Lyft, I was playing poker, I was doing my wine tour business, and any money that I had left over after paying my bills, I was funneling it over to Robinhood. And then the CARES Act happened where you could access your 401k without the penalties, thanks to Donald Trump. And that's when I was able to move bigger money over and start my career because I knew that the transition was real.
Correct.
I knew that the transition was real and that this is what I was going to do with the rest of my life. This was my calling. The oil field was a nice stepping stone for me from 2011 to 2020. But it was time to move on to bigger and better things. And I was tired of getting my hands dirty. Right to the oil field. It was like, dude, I'm surprised I still have skin on my hands. I was constant. They would wash these hands with diesel, bro. There was so much crap on these hands from working as the Derek Man, pit hand, forehand in the oil field that I would like literally put my hands under the diesel because that shit cleans it out real quick. But I'm like, dude, and also, like my skin's there and who knows how many chemicals I'm ingesting through the skin. I was like, bro, I need to get out of here. This shit is whack.
Yeah.
This is whack. Yes, a shout out to Dougie Dallas. Dougie Dallas gave me this cap. So I'm rocking it proud. I'm rocking it loud today because Dougie Dallas.
But one thing I did hear though, they supposed to be changing that PDT rule, and they're gonna leave it up to the brokerage firm to set how much capital you need, the requirement. So it probably go down from 25,000 to 2,000. But like you said, you still want to kind of have at least 25,000.
If you were starting a team, John Olerud or Tino Martinez, dude, I'm a Yankees fan, so I'm inclined to say Tino Martinez. But if I'm being more objective, I think Olerud was probably the better player. It's just real hard. It's real hard because I'm a Yankees fan. So I feel like I'm biased, right? I'm biased. I'm gonna say Tina.
Yeah.
But Olerud was something special back in the day. He was something special. So anyway, let's get into it, man. Let's get into it. Option. What I want to do is I'm going to pull up the portfolio here a little bit, and what I want to do is I want to talk about managing positions, managing your emotions, and not over trading.
Correct.
Not over trading. So because I think that we can definitely fall into that trap where you're just over trading, and you gotta let time do its thing, right? Like you gotta let theta. If we're gonna be part of the theta gang, you gotta let theta do its thing, right? So and you got to be able to handle some heat, because there is going to be some heat, especially if you want to get in the short strangle game like I've been doing.
Correct.
So is that on the screen right now?
Yes.
I'm just waiting for confirmation on my TV over there in the background. Okay, we're good. We good. So that's the thing. That's the thing. The thing is, I made these moves yesterday, and I started rolling a week ago to the 56-day cycle. I started when it was like 60 days out, right? And now I landed on the majority of the positions are 56 days out. So what do my eyes look at? I want to show y'all what my eyes look at, and then option, I want to hear from you. What do your eyes look at whenever you first go and open your portfolio? But the first thing that I look at is on the very top right, and I got the highlight in the middle on the 60. That's the big account, right? So what do I look at? I look at my P&L for the day, and I look at my P&L year to date. I read it from left to right, just the way that it is. I look at the options buying power. I glance at my deltas, and really the number that I look at more is the theta. So let's talk about that data. That data is now at $57,000 a day, all things being equal. Very recently, it was above $70,000 a day. So why did that happen? Why did such a drastic change happen? Is because I rolled everything out to the 56-day cycle. So I'm collecting that steady theta, but it's slower because I don't have expiration dates that are around the corner anymore, right? Because the data collection gets very aggressive whenever you're inside of 21 days to expiration. So that's the argument. Why don't you stay in it a little bit longer and collect more data? Because, well, just like the data is more aggressive, so is everything else. The data's not alone, right? The gamma's more aggressive. Every move it's magnified, it's amplified, right? Yeah. It's like every move feels bigger than it really is because it's shit or get out the pot time, right? Expiration dates around the corner. All of these Greeks are like little worker bees, and they have to get the delta to -1, 0, or +1 by expiration date. It has to happen mathematically.
Correct.
So it's kind of like all the pressure is in this tube, right? And the water is like there, and eventually it's going to come out the pipes, right? So that's why professional data collectors, they're like, why don't I just keep rolling and rolling and rolling and managing and just get the steady delta, and then you can eliminate a lot of the beta from your portfolio. You can eliminate a lot of the volatility of your portfolio. So that's what I keep looking at. I look at the data. I look at the short Vega. That's a real big number that tells me that I have a shitload of options when you're short Vega. So why is that important to recognize? Because in a major volatility expansion event, that buying power could get sucked up very, very quickly. So it would be a good idea to trim some positions so that I'm not short so much Vega. And then the other number that I look at is the number that is the most exciting number in this entire thing. It's not the year to date. It's not the P&L. It's not the net liquidation value. It is my outstanding extrinsic value of the options. All things in a perfect world, in a utopia, an ideal society, if all of these options were to expire out of the money, that is how much extrinsic value is going to move over to the net liquidation value. That gets me really excited because in this portfolio, that would put us over $20 million. And I start looking at, okay, well, how am I managing the bankroll? Am I being responsible with the bankroll? Can I handle a black swan event to a certain extent, right?
Mm-hmm.
And I look at the buying power usage, 8.4. So what is that percentage wise? 56.4. I mean, Tom would probably not agree with any of these trades, but he would agree with the bankroll management of it because I'm following the Tasty Trade way because they want you to be at about 50%. Tom admittedly says that he's at like 60, 65, 70% because he's a little more aggressive, right?
Yeah, that happened. Mm-hmm.
So I feel like I'm following the Tasty Trade way as far as those parameters. Now, the way that I choose to trade my sell, my puts, my calls. I mean, dude, I'm the CEO of my portfolio, not Tom, not Tony, right? It's TJ the Will Deal show here. So I'm going to manage this portfolio accordingly, and I'm going to live with the results, if that makes sense.
Mm-hmm.
Just like they live with the results, right? That's why you got to be careful whenever you look up to people, because I look up to Tom. I look up to Tony. I don't know them personally. One day I hope to. But at the end of the day, I'm not going to let them influence how I got here. Like I got here selling puts, calls, collecting premium, rolling when it makes dollars and cents. I'm not trying to be Tom. I'm not trying to be Tony. And I don't want y'all to try to be TJ the Will Deal. I want you to figure out who you are in the market, how you're going to navigate this game, and how you are going to manufacture the win because you have to push those buttons and live with those results. Option, anything you want to add to that mindset?
Oh, no, definitely. I mean, the only thing is what you get from that network is the fundamentals. They teach you how to drive, but you mean if you want to go over the speed limit, then that's on you, right?
Yeah.
If you want to go beneath the speed limit, that's on you, right? So yeah, so you 100% correct. Mm-hmm.
So the other thing that I look at is, like I said, is the buying power, and then obviously over here at the end on the right hand side, P&L open, P&L day percentage, P&L year to date with the fees. Those are all metrics that I look at as well.
Correct.
Then I go to the actual. This is called the book, right? This is like my book. What's my book is all the symbols, the last, the trade price, the mark, the extrinsic value, exchange rate of return, profit and loss day, profit and loss open. Like I can highlight, PayPal there, right? I can open up PayPal. That's the stuff that I look at. But really what I'm glancing at real quickly is I'm looking for any little yellow cautionary rectangles that say ITM in the money.
Mm-hmm.
Because those are the ones that potentially need to be addressed. Right now, I could just glance at it, and because I don't have any options in the money, I can just go play golf right now. And the other thing that I look at is I go to the middle of the page and I look at my days to expiration. Mm-hmm. And I see everything's 56 days out, and I got a couple that are 119, one that's at 175, and then I got my Tesla backstop short strangle with the angle of the dangle. I got it all over there for 328 days out. I ain't messing with it. It does what it does. It is what it is. It ain't what it ain't. I don't need to make sense of why in the hell is Tesla at $320 right now when those earnings were absolute dog shit. Like, I don't figure that out anymore, because I'm like, I look at my strangle, it's 250 and 500. Talk to me in 30 days. Talk to me in 60 days. Talk to me in 90 days. Mm-hmm. Because it's probably going to be in that range comfortably. If anything, the 250 after those shitty ass earnings, the 250 could be in jeopardy, but certainly not the 500.
Yeah, right.
So anyway, option, I really want you to chime in here because people have asked me a lot during the FaceTimes mostly. Mm-hmm. So what do you like about the strangles so much? Because you appear so at ease now on the channel. Even though I was pretty cool, calm, and collected previously, people can see that I'm de-stressed. Mm. So what is it that I love so much about the short strangles? So I want to give you all 2 or 3 bullet points as they come to mind. Mm-hmm. The first thing that I love the most is that I don't have this stress with covered calls and how much money I'm leaving on the table because I don't own those shares. Mm-hmm. So I have to manage the short put and the short strike, the strangle, and I have to roll it out 60 days, 90 days, up, down, left, right, in circles. I really don't give a shit because I don't have the same capital allocated to that position because you're doing this with a fraction of your capital.
Correct.
So I don't have this. Oh shit! I'm using Palantir because Palantir is on the run right now. So I got the cat loud and proud, right? Holler, Dougie Dallas. I don't need to make sense of why in the hell Palantir is trading at 159, well north of 200 forward PE. Just shit that just doesn't make any sense to me from a valuation perspective. So I don't have that stress anymore of do I keep holding these shares? Do I sell those shares? I'm just playing the rage game.
Correct.
To me, it's a hell of a lot easier instead of figuring all that shit out. It's a hell of a lot easier to put a strangle out on Palantir. Now I'm at 140, 160. I'd say that's like about on a level of 1 to 10, 10 being comfortable, 5 being uncomfortable. I'm probably between 4 and 5 right now. And it's not for reasons that y'all think. It's not the 160 doesn't cause me stress. It's because I had to continually roll the strike on the put up, and now I'm sitting at 140. So now I got a commitment on paper to buy 25,000 shares of Palantir at $140 when I don't want to touch this shit over 100. That's what has me stressed out about this position, not the fact that it's rubbing up against my strike price on the call, because I think at some point somebody's going to put a pin in the balloon, right? That is my fear. I'm hoping it doesn't happen within the next 56 days, right? Just calling a spade a spade. So when I look at this position, what am I looking at? This is where I go. This is where I go. I go over here to these. Let me switch over real quickly and show y'all the stuff that I look at. To go to trading, I'm pulling up the chart, right? So I have visual representations of all this stuff that I look at on a regular. So I'm going to go here. So right there. So let me make this just a little bit bigger. Can y'all see that pretty comfortably? Mm-hmm. So I pull up old Palantir, right? So I go find Palantir over here. So I look at it right here, and then I'm going to go to the chart. And guys, and I recommend y'all do this kind of thing. So this is Palantir. I have it on the daily. I'm going to put it on the weekly. I'm going to put it on the weekly because a lot of people, we don't sell daily options. We sell weekly options or monthly options, right? That's 30 to 45 days out. So I look at this thing right here. This is on the weekly. This is September the 19th expiration. This yellowish burnt orange bar on the bottom signifies my strike price on the put at 140, and the bar on the top signifies my strike price on the short call, 160. And I have them real nice and bold. This little brick wall right here is the expiration date. This little rectangle right here that's a week long from September the 1st to like September the 7th, that is when ideally I want to manage this trade again. So that's kind of what I look at. So I look at the price action here. This big old bar right here is rubbing its ass against my strike price on the short call. So I look at this thing and I'm like, this thing's just gone parabolic, dude. Like, look at this thing. Like, even Stevie Wonder can see that this thing's just been going up and to the right. Now there was a big pullback right here. You'll see this red candle right here around February the 17th. There was a red candle. There was another red candle. These are weekly candles on February the 24th, and another weekly candle on March the 3rd. And then it kind of went sideways. And then there was another weekly candle over here on March the 31st. And then around this time was Liberation Day, right? And it was really weird because this didn't affect this company the way that you thought that it would. And then there's a big ass green candle, a little red candle, big ass green candle, April the 21st, big ass red candle for April the 28th, kind of a small red candle, May the 5th, decent candle, green. And then it's just been small reds, bigger greens, small reds, bigger greens, right? This isn't high-end technical analysis. This is just visual representation of what the weekly candles are showing. That at the end of the day, when there's a pullback, with the exception of this one ugly ass red candle ending on February the 17th, 2025, the pullbacks have been small, but the gap ups have been really, really big for a hot minute now. So I see my little, TJ's Bollinger Band, which is 140 and 160, my sweet spot.
Mhm.
My sweet spot isn't looking too sweet. It is from the standpoint of Palantir's never been at these levels, and that's where my strike price is, right? Is at all-time highs right now. So that part's okay. But there's no resistance up over here because it's never been. And that's what some technical experts argue, right? So they start looking at Fibonacci's and all this other shit to try to decide, well, where could this thing go? Piper Sandler comes out and they're like, 175 price target. So people start fucking buying Palantir because there's no way that it could possibly go down and all this other stuff. So I'm like pretty far out, right? 56 days to expiration. So what do you do? So I was sitting at 135 on the put. The deltas were out of whack, right? Because I had like a 54 delta on the short call, and I was like at a 17, 18 delta, something like that on the short put. So there was no delta neutral action going on whatsoever. So what I chose to do was simply roll the untested side up to capture more premiums, lock in more wins on the winning side of the trade, right? Because if you look at the order chain, I feel like is the order chain over here too, option, or do I got to go back to the other side?
It probably is. It probably is up there, but I don't never.
Yeah, I don't mess with this. I literally only use this for the charting because I'm not able to do it on the other side for some weird ass reason. But if
go to dashboard.
Let me see if this order chain. I don't think the order chain's here.
Yeah, I don't know where it's at on there.
It's all good. It's all good. But when I started this position, maybe it's over here, dude. Check this out. There we go. Does it look like it might be it? Order chain?
Yeah, right.
When I started this thing, 100 on the put and 150 on the call. Mm-hmm. This was a while ago, right on 5/15. And then I went from 100 to 110. And then I kept it that way, rolled. And then I'm still at 110 and 150. I'm showing y'all everything on the right-hand side. And then I went from 110 to 115 on the put, right? Bringing in more credits because Palantir kept going up. And then now I'm at 115 to 120. Palantir keeps going up. Now I'm already in the middle of June, right? June the 16th. And then I just rolled the entire thing out. So now I'm sitting at 120, 115. And then I rolled from the 115 to 120, but then I also rolled from 150 to 155 to give me a little more breathing room to the upside. So now I'm sitting, then I closed out some positions. I did this with you on the channel that day. And then I'm sitting, I go from 120 to 130 because this thing just wants to keep bumping, right? Okay. So then now I'm at 130 and 160. This was on the roll yesterday. And then this morning I was like, dude, this is crazy, but I'm going to have to go from 130 to 140 because I just want to keep bringing in credits. So why do I want to bring in credits? Because at some point, this brick line is going to happen. This expiration date could happen. And I want to have a lot of credits to where I no longer want to roll the expiration date. I just want to roll the strike so that I could get to an expiration date, if you will. So I could take all of my credits that I've gotten mostly from rolling the short puts and rolling the entire contract out and to the right. And then I could put this at 170 and probably get to the expiration. I might have to give back $100,000, but I'm okay with that because I could still lock in a huge ass win. But that's not what we're trying to do here. I want to stay in this trade. I want to roll and expand. Eventually, this thing's probably going to be at like 170, 180 on the high end. So I could it's going to look like something like that. Like in a perfect world, this would be fast forwarding 3 to 6 months from now, probably. I would like for this position to look something like that. Something like that. something like that, give or take.
Mm-hmm.
And I'd be like, hey, I think I could potentially write it out, maybe not to zero expiration, but to 14 days or 7 days and capture all that extrinsic value. So this is a campaign for me.
Mm-hmm.
It's not just like, oh, like this shit has to work by this expiration date option. That's not what this is for me. This is a campaign. I'm trying to make $500,000, possibly even $1 million with Palantir. So it stands to reason, just like you have to own shares for a long period of time, that you have to be in this strangle for a long period of time so you can navigate it and manage it, roll, expand, contract, whatever the situation calls for, so that you can eventually create the levels that you're very, very comfortable with.
Mm-hmm.
And it takes time to do that. But that's not where we're at right now, right? Where we're at right now is the reality is that we're at 140 and we're at 160. But I'm showing y'all where I would like it to be.
Mm-hmm.
You know, where I would like it to be. So that's the thing in a nutshell. So I look at it and I'm like, hey, that one doesn't look that comfortable, but I'm okay because why? It's 56 days out. So I don't really have to do anything right this second because it's 56 days out. That's the reality of it. So I have a hard time believing that I'm gonna wake up and they're gonna like have forced us to buy the 25,000 shares of Palantir. I don't believe that that's gonna happen. But let's just talk about it. Let's just talk about what would that look like if it did happen. So I'd like to figure out how to close this thing out. Here we go. So what would that look like if it happened? Like let's talk about because that would be a pretty shitty scenario. We could all agree with that, right? Option.
What's that?
If they were to force me to buy these shares to deliver them at 160. Because all that means is that I'm on the hook to buy 25,000 shares of Palantir, and I got to deliver them at 160. Well, right now it's trading at 159, so technically I would be profiting 35 cents a share.
Mm-hmm.
It would just be very expensive watching the money move around, but thankfully there's plenty of money in the brokerage cash and the buying power to absorb this particular transaction, if you will.
Exactly.
But it wouldn't really be a losing transaction if I bought the shares at 159.65 and sold them for 160. It just sucks that I had to tie up that amount of money for that period of time. Now, why would it be uncomfortable to do that? Because I would hate to buy these damn shares at 159 and some change and then have this joker tank to like 140, because then now you have a material loss on your hands, right? Of buying the damn shares at all-time highs, and then it starts sinking to more realistic levels. Palantir shoots up to like 165. Now I got to buy the shares at 165 and deliver the shares at 160.
Mm-hmm.
That sucks because now you lose $5 a share, right? On 25,000 shares, it's a good chunk of money. It's a good chunk of money. So what are the things that you could do? You can obviously roll the untested side, take in more credits, use those credits to roll the tested side up to get a little bit more comfortable to prevent that from happening. Other things you can do, option, is you can make sure that you have 56 days left on the contract, because it's very unlikely that your counterparty is going to do anything right now, because they had to pay premiums to get to this point anyway. So anyway, that's just the stuff that I look at. Option. What would you like to add, my man? Because I'm sure you've been in this type of situation before. I think a lot of times people have a real hard time doing nothing, if that makes sense.
Yeah. I mean, you have to understand the position that you in, right? So if we look at the position that you in, you got over $30 per contract in total credits, right?
Yeah.
So, and then you have so much extrinsic value in that 160 left that it's just virtually impossible that somebody's going to, call those shares away, right? So at any given time, you can restructure that whole position, give back some of those credits, and widen up your strangle. So I mean, it's no threat there. Now, of course, you're gonna get tested, right? I mean, those things happen. That's why when you place a strangle, you have to kind of expect being tested. So if you're doing a 20 delta strangle on both sides, you have that 20% chance that you might get tested. So you play for that. But just because you tested don't mean that you panic, right? Because we love strangles, and the reason why I love a strangle is basically because the win rate, right? I love the win rate that you get by playing a strangle, and I also love the way that you can defend it if things don't go your way. So in the way that it recovers, if that makes sense. So you know the way that Palantir position is sitting, yeah, you like 159, your strike is 160, you 56 days out, it's no pressure there.
Yeah.
It's no pressure there. You just relax and
Well, I think the pressure is in between the ears.
okay. Well,
See,
yeah.
there's perceived pressure for people because I got a comment on X from some guy named Seabass, I think.
Uh-huh.
Oh, you must be feeling the pressure of those short calls right now on Palantir. And I'm like, not really. I rolled the short puts up for $59,000 in credit. That was fun in my mind, right?
Yeah.
And I'm just like, I truly can't believe that it's at these levels. But to my point earlier, that's why I love the short strangle so much more than owning the damn shares, because I don't have to figure out why it's trading at these levels, why it's not. This is where it's trading. This is what I got in front of me. I just want to make sure that I'm wide enough so that I can eventually make it to the finish line, or 14 days to the finish line, right? I don't know that I'm ever going to want to get to that level unless I was sitting at like 80 and 180. Let's gamble, right? Because trying to get to an expiration date, let's just call it what it is. It's calculated gamble, right? Because that's where winners can turn into losers very, very quickly for you. So
and the fact that it it's never no pressure, because as long as you stay small, right?
yeah,
You stay in the size, you keep the correct size. You're never like really under any pressure.
right.
You're just not. If as long as you staying small and you're able to manage the trade, I don't care if you have to manage the trade for the next year, right?
Yeah.
As long as you stay small, stay mechanical, and be able to, just let the position play out, you're gonna get the move that you want.
Absolutely.
I mean, now, would you make a whole lot? Would you be real profitable on the position? Maybe not, but
Right.
you can at least reduce that trade to a scratch, a very small loss,
Right.
and that's the power that you get from utilizing the strangle. That's why I pretty much love it.
Absolutely. So let's look at another one. Visual representation. I got Apple. We're sitting at 195, 235, September the 19th, 56 days out. Profit and loss for the day is good. Year to date, 64,000. So then I go and I pull up my
Let's
little
go.
chart.
Can you go to the other? I hate this shit right here, man.
Go ahead. Yeah, hold on.
Yeah,
But it's just to be able to show the chart. And I look at it and I'm like, okay, this one looks really wide. And then I look back to March and I'm like, did this thing's been playing with the exception of a couple of like over here from April or November the 25th of 24 to March the 3rd. Apple been playing in my range, right? That's why I like this range game here, because I have a visual representation of the range of the strikes, right? I'm on 190, 195, 235. This is my weekly bar where I'm going to theoretically manage this trade. And then I got the brick wall, which is the expiration date. So anybody could look at this and see that this is a much more comfortable situation than the Palantir trade. And that's what I do on all the charts is I just put my prices. I put my short put, I put my short call. I have the Bollinger Band there that's based on the 20-day moving average. And that's the high, the middle, the low. Again, not to get real technical, and then this little weekly bar here that I put, this little rectangle shape, that is just, when I look at it, I'm like, hey, I still got a long way before I manage this trade. So there's not a whole lot to do there. And then I just look at Amazon real quickly, same thing. And then we'll go back to the one that has better color. As I look at Amazon and I'm like, look pretty good. It's over here, this green bar. This is where it's trading right there. I'm at 220 and 250. It looks really, really comfortable. Looks really, really comfortable. And then I'm just eyeballing it. I go look at end phase, just real quickly, just a couple more, and then we'll get over to the other one. Y'all can see that visually end phase is pretty tight. I mean, like 35 and 50, and I'm way down the road. But I'm also looking at here at the chart that end phase has been consolidating for a pretty hot minute now. So I'm just playing for that consolidation because they just had earnings. There's not a catalyst. This thing's not going to go. It could happen. It's very unlikely. It's going to go to like $100 right now. So I'm playing it pretty tight. But it's also at a level. It's also at a level. If I zoom out on the chart, my short put is at a level that end phase hasn't been in a very long time. And it's at a level that for a swing trade, I'd consider taking ownership of those shares and trying to get $2 or $3 or $4 or $5 of capital appreciation as a nice little boost to the portfolio. But it's kind of unnecessary because I know I could just keep making money with the credits and never take on the stress of owning shares again. But that's that. I mean, it's just, guys, this thing is only as hard as you choose to make it, because I always just look at what's in front of me.
Yeah.
And
I mean, I don't have no knock with, the charts and things of that nature, but I do personally feel you have to be careful because that look can drastically change in one day, right?
that's a fact.
That it looked in that level, but if you wake up the next day, that green bar can be wherever it want to be.
That's
I feel
the reality.
you have to be careful with that,
But this is why we look at it. We look at these right here and we're like, okay, 75 to 80, it's at 78. We're doing the same shit here on this one without looking at the chart, but we're always looking at our put, our call. Now here we get a little bit more information because now we go and look at the deltas, right?
And that's the main thing, right?
Yeah.
And why don't you? I mean, I know you don't want to move that a little bit closer.
Which one?
The deltas.
On 18 and 31 on PayPal?
No, I'm talking about the whole ETF delta. You can probably replace that with the extrinsic ROI.
I have it right. I have extrinsic ROI over here.
No, I was saying, can you want to replace that delta with that? Like move your delta to that slot.
Oh, I hear you. But it's because I have all my Greeks on the right hand side together, right? I have my theta and my delta. So I have like OCD. So it won't let me separate my Greeks like that. It'll drive me crazy. No. So it's like, because I have extrinsic and then I have extrinsic ROR, so they're close to each other. And then I have my profit and loss day, my open with the percentage, the open days open, days expiration, earnings, probability of profit. Obviously, you open it up, it tells you the percentages, and then the cap requirements. And then I have my Greeks on the far hand side. I could potentially move these over here, but it just doesn't flow for my.
No, that's
the way my brain looks at it.
That's cool.
Again, it's like we're all little pilots, and this is your airplane, and you got to put the gauges that make sense to you. Yeah. But I'm just looking at my deltas, right? Like I look at PayPal, I'm like 70, 85, 18 on the put, 31 on the call. So I'm like, okay, so I'm short delta there. So it's better for the portfolio if PayPal goes down versus up, right? Like it's just a little visual thing real quickly. PayPal is just printing money, dude. 77,000 year to date. I'm very, very comfortable here too. Like this is one thing that I cannot stress enough to you guys is when you have a trade and you're very comfortable on the short put side, because in your mind, you don't have a lot of risk to the downside. Boy, it's exciting because you can get very, very aggressive with that short put, right? And that's what PayPal, and that's what Apple, that's what United Health and Enphase, and even TSLL, I'll show you all that one in a second. Those represent something to me because I'm like, I don't even have to look at the short put. I'm only monitoring the short call because I'm okay taking ownership of these shares if I need to. Y'all can see that Palantir just ticked up a little bit. So let's talk about the over managing option. Like, how do you do it? Because
Mhm.
There's a lot of people that aren't going to stand the pressure of, oh my God, my short call's out of the money. Oh my God. Like, I mean, because I just look at it, okay, well, shit, I got to buy them at 160.29, 160.30, and then just to go and sell them at 160, I lost 30 cents a share. Not really going to break the piggy bank even on 25,000 shares, right? I'm like, it sucks, but it's kind of a nothing burger right now. That's the reality of it for me. Now, will it start affecting your buying power? Absolutely. You'll see this capital requirement. If this thing goes further in the money, this cap requirement is going to go up and up and up, because I've already experienced this with
Mhm.
with Tesla before. So how do I fix that? How do I remedy that? You got to be willing to roll this strike price on the untested side a little bit more to take ease off the portfolio. So I'm going to walk y'all through what that looks like so y'all can see. So you roll the strikes up. You're like, dude, I'm tired of jacking with it. I want to get more delta neutral, right? Because it stays at 55. I want to be at 40 on the put, or 155 on the put, 40 on the delta. And you go review and send, and you'll see how it increases your buying power because now you're more delta neutral. But the reason that I won't do that is because I'm not comfortable, because now I'm having to commit to buying this stupid stock at levels that I have zero interest in. So I would rather just deal with this thing being in the money for a while. And again, it's 56 days out. I also look at the money. Is the money there? There's 20 million point four. There's plenty of options buying power. This is an agreement. $4 million bucks. Like, I had to go buy $4 million worth of Palantir right now. If I wanted to take all the pressure off the portfolio, I don't want to mess with any more options. Let's turn this into a cover strangle. Go buy $4 million worth of Palantir. How do you feel about it? I feel shitty. I'm not going to do it.
Yeah, I damn sure
So
wouldn't do
I'd rather manage my short strangle for the next year and a half, than fork out $4 million fucking buying Palantir at an all-time high. Let's be serious for a
Yeah,
second.
I mean, and when you look at the trade table, right? Why you don't have to even? That's like not even a consideration. If you
Yeah.
go to the trade table, go to the trade table.
Yeah, right here.
Yeah, and you look at Palantir, you got like $13.50 of extrinsic value left, right? So it's like, what are we worrying about,
That's
right?
what, I want to have this conversation because I think that people that maybe just recently started selling short strangles or whatever option, the only thing that they can see is the strike price and the share price. They don't know how to dissect the guts of the trade, if that makes sense. Excuse me. Hey, baby. Yeah, with option. Are you hungry? I haven't eaten. I could eat. I haven't eaten. I'm trying not to eat till 12. Give me whatever, baby, but I'll be done in like 15 minutes. Gotta run. Bye-bye.
All right, so let's say that's the case, right? Let's say that. Okay, let's say you got the 160 and you feeling the pressure and you want to do something.
Yeah.
So if you pull out your order chain. So if you if you in this position,
this side is just so much cleaner, dude.
yeah, other shit I can't deal with. But if you look at your order chain, you have $33 of extrinsic value, right? So you close that up. I mean, not $33 of extrinsic value, but $33, close to $32 of credit, right? So close up Palantir. So let's say, for instance, you wanted to fix this now.
Yeah.
You're feeling the pressure because you feel it's going to continue to go up. If this was
you could just roll everything up. You could do this. You could do something like this right here if you want to take pressure off. And you're
keep on coming, keep coming. Come to the 185. Come to the 185.
Oh shit!
And if you came to come to the 180, the expected move. You only giving back $6.75 of that $32, right?
Yeah.
So that's the purpose of continuing to roll the untested side. So if
and y'all got to roll the tape. Hold on 1 second, option. 1 second, buddy. when I rolled the entire position yesterday
Mhm.
and I collected a shitload of credits, I said, hey, I'm being greedy.
Mhm.
If I have to give some of these credits back to expand it the way that I probably should have expanded it yesterday, because I could have gone to like 165, 170 yesterday
Mhm.
and gotten, like $100,000 less in credits, but I wanted to go for the jugular, right? Because I
Mhm.
said that I can handle the pressure. Again, I'm trading to my temperament, right?
Yeah,
Everybody
there's
has their
nothing
own
wrong with that.
temperament. Everybody's like, I see comments like, oh, yeah, the bankroll. Da, da, da. I was like, bro, I also got the moxie. Like, I can handle the pressure. This is where playing poker for so many years has just helped me because I understand what this trade consists of. Like,
Yeah.
dude, I don't know what movie y'all are fucking watching, but I'm not gonna wake up to a fucking email that says, "Hey, you were forced to buy Palantir at 161." It's just that's not the world that we live in. So you
And
got to
the
be able to
thing is,
control the space between your ears. Go ahead, option.
and like you say, sometimes being aggressive, right? Because you got to get paid. You have
Yeah,
to get paid for
for the
this stuff,
risk.
right?
Yeah,
I'm not going to be sitting at 230 because I can get $1.30.
yeah,
Because the further you're out and the harder the move, the more it hurts. But the closer you are, it doesn't hurt that much. So
yeah.
yeah, so it's easy for you to just get out of that situation right now. And that's the importance of rolling the untested side when your delta's
Yeah,
getting
but it's
low.
also easy just to sit back and do nothing and watch Palantir come back down to 155 because that's very likely scenario too.
Yeah, yeah,
And like it got a price target of 175. That doesn't mean that it has to go there today.
yeah,
That doesn't mean that it has to go there in the next 56 days. And I just think that what I wanted to really go on and talk to y'all about is I feel like what I've gotten the best at is avoiding knee-jerk reactions.
yeah,
Like I'm like, dude, it's like bowling, right? Like I tried to bowl in college. There was a little group that my roommate was part of, and he was trying to get me on the team, but I sucked compared to everybody else. And then when they were teaching me to bowl a little bit, there was like these little arrows and shit, and they're like, "Hey, just 1 or 2 little inches of correction over here is going to
yeah,
make a real big difference by the time you get to the actual pins."
exactly.
And that's just kind of the way that I look at it. Like this, it's like reversing a truck and trailer. Small corrections, dude. Small corrections. If now you're gonna jackknife the whole shit. It's just for those of y'all that drive a truck and trailer, you'll understand what I'm talking about.
Mm.
So I just try to make small corrections and I'm just collecting data. And eventually I'm going to position the trade to where it's comfortable for me. I can either do it in the middle of a cycle or I can wait until it's time to roll for the next cycle. And then at that point, I'm only rolling for comfort and relaxation. I'm no longer rolling for credits at that point. But
Yeah,
yesterday, I was rolling for credits. You follow me?
yeah,
But again, it's just I have a longer outlook. I have the ability to visualize what this trade's going to look like in 90, 120, 180 days. And I think that a lot of newer wheelers have a real hard time seeing past the stupid expiration date that's on the page right now. And I think that that's your issue is you can't see the forest through the trees. Like you just see 56 days to expiration and you treat it like the gospel of Matthew, Mark, Luke, and John. Like that's all that we have to work with. You treat it like the tablets that Moses got for the 10 commandments. And that's just not the way that I look at this game. Excuse me 1 second. What's up, baby doll? I don't care, baby doll. I'm on the page. Get whatever you want to give me. Bye-bye. My wife knows damn well I'll eat whatever the hell she brings me. Beggars can't be choosers option.
mm-mm.
What's up, buddy? And G Money wants to say hi. G Money said, "Hey, y'all get me stressing out over stupid shit, okay?"
Who's it go, man? I mean, you just have to. In my personal opinion, it's like you have to understand the position that you're in your
Yeah.
advantages, right? And you have so much advantage with that type of position if if you are being tested. I mean, like I showed you earlier, I'm still in the 21 day with an in phase 42 strategy. You know what I mean? So I haven't rolled out yet, but but what do I understand and know? Okay, I know how much extrinsic value I have left, and I know that now gamma is my friend.
Yeah.
Right. So any move I can get up, then I'm going to stay in the 21 day.
So you're at the 42 strut. Is that what you said?
I got a straddle at the 42.
So you sold the put.
I sold the put on earnings. It dropped.
And then you sold this guy right here, right?
So that's my position right now.
Okay.
So what I'm gonna do? Okay, I know that gamma is my friend, right? Because if I can get if Palantir can give me about a $2 to $3 move up,
in phase.
I mean, damn, not but in phase can give me a $2 to $3 move up. That's gonna put me in a position where I can take the trade off for a scratch or I can roll it. But even now, I know that I got 27 cents of extrinsic value left. I'm gonna hold that probably to like 10 days, or until my extrinsic value is down to like 5 to 10 cents. And then I'm going to roll it out, right? So how it would look would be turn those two green. Turn those green, TJ. Just click on the S1. Just click on the S1.
Okay, sorry. Now what am I doing?
I turn buy those back. So hit the axe. And hit the axe there.
Okay.
All right, so that's gonna cost me $7.26. I got like $4.70. I got $4.75 of credit on that position. So now
you're down about $3.
Yeah. So close the 21 day and go to the 56 day.
So I just delete this leg?
No, sir. Keep those there.
Okay.
And then just minimize the 21 day.
Got it.
And go to the 56 day. Now this might be a little different because you got positions on in here. So what I'm gonna do is, and I already know, okay, if I don't get the move up and I got it now, roll out, I'm gonna have to give back some credits, but I'm fine. I'm gonna sell the 35 put.
Okay.
And I'm gonna sell the 40 call. So I'm gonna break the straddle up and turn it into a strangle. I'm giving back $2. Let's just say it's $2.75. I got $4.75 in credit. So I still got $2 in credit.
Yes.
And I just go from there and just manage it out until I can,
But you really positioned yourself better because now your put is really helping you. The short put is helping you 35.
Yeah, so it's really, it's just being able to just be mechanical, move the positions around the way that you're supposed to, and then go from there. But you have to, don't let a loss or this is in the money or this is going this way kind of get you unsteady. Because if you look at it, if it was say for instance, if it was a stock move, you would be down, $5, $6, $7 on a stock move, and it's like your losses will be way more higher than this regular strangle. So it's it's just how you just got to be mechanical with it.
Absolutely. I think that the hardest thing is just managing the space between your ears, guys.
Yeah, I think that's why I'm listening and look at it.
You look at this P&L. You look in the P&L day, right?
Mm-hmm.
This guy right here, and I put it to where the bigger loss, the biggest losses are at the top, and so on and so forth, right?
Mm-hmm.
And you just go look at it, and you're like, "Oh shit, I'm down 59,000 for the day," and then you're opening, you're all aggressive, and you're looking, and your blood pressure's elevated. Your heart beats, 120 beats a minute, like you just fucking ran a 400 meter dash or whatever. You know what I'm saying? And I'm just like, okay, like calm the fuck down. And let's really see what's going on. Like calm down. Like, there's one of the guys who's like, be water, right? From one of my FaceTimes. Like, be water. Like just like the Bruce Lee thing, right? Like chill out. What's really going on? What's really going on? So, okay, Tesla, 250 put, 500 call, 328 days out, 22 on the Delta, 30 on the Delta. So reasonably pretty Delta neutral. I'm obviously losing a little bit more money on the call today than the money that I'm gaining on the put. And that stands to reason because the delta is higher on the call than it is on the put. So, but it's also 328, what 328 days from now.
Mm-hmm.
So what is there really to do? It's 250 and 300. I don't got to do anything except try to collect some of this data. This little snowman over here saying I'm getting about $3,200 a day. Let's revisit it in a month. Let's bring another $100,000 through the door and let's see what she does.
Mm-hmm.
Because I can't act like those earnings didn't happen a couple of days ago.
Yeah.
I mean, dude, this is already 2 earnings in a row. The shittiest earnings in a long time with this company have happened 2 quarters in a row. And I get it, forward looking and Robo Taxi and Optimus. And oh my God, did you see the Optimus pouring the fucking popcorn? I get all that stuff.
Yeah.
But at the end of the day, it ain't adding shit to the bottom line. It's just making you feel good about the company.
Mm-hmm.
And at some point, dude, and I want y'all to put this on repeat, rewind, repeat, rewind, replay. At some point, every stock is going to trade on its fundamentals because fundamentals matter, valuations matter. It's just a matter of time. The thing is we don't know when, right? That's why they have all of these fancy catchphrases like the market can remain irrational longer than you can remain solvent. And all of those things. So I'm just like, okay, well, I'm going to be real wide because I can't make sense of this price action. I truly believe, like legit, that Tesla should be traded under $250. If I'm really honest with myself, it should probably be trading it under $150. But I'm a real big Tesla fan, a real big Tesla bull, a real big Elon fan. So I sip a lot of that hopium along with the next guy. So I just position myself for it. If Tesla goes on a fucking moonshot, I'm just going to start rolling up the strike on the put. And then if shit gets out of hand, just roll everything out into the right and just make sure that I have plenty of buying power to work with. Like bankroll management is a very, very critical thing. If Palantir and Tesla persist to be a pain in my ass, I'm going to have to go cut some of these easier trades so that I can make sure that I have the capital to go defend these strangles. Like right now, I'm real wide because everything's peachy and fucking creamy. So I'm casting a real big net, nibbling 10, 20, 30, 50, $100,000 here and there. But if shit gets real with 3 or 4 of these strangles, you best believe you're going to see a lot of those other positions go away because now I need all my focus, all my energy, all my firepower because shit just got real. And now I'm excited. Let's play a game, right? And that's just the way that I look at it, right? Like I'm just like, okay, these are my chess pieces. This is my word chest. And I'm like, I'm going to defend it. I'm going to do whatever the hell I got to do to come out on top. Because at the end of the fucking day, I'm going to manufacture the win. That's what I do. And I'm going to just make sure that I control the space between my ears and I filter out the noise. Whenever I go on, I trade live for you guys. I show all of my positions. I'm showing all of the vulnerabilities. This channel does what no other channel will ever fucking do. There's not another TJ the Wheel deal out there. I challenge you to go show them to me. They just won't fucking do it because I even give you the narrative of why I've got all these trades on. But I am really, really good at filtering out the noise because I don't care how you would deal with the situation. It only matters how I would deal with the situation because at the end of the day, I'm the captain of this particular ship. You need to be the captain of yours, if that makes sense. And that's the hardest thing about having this channel option is it's so easy to let the chat and everybody else influence you.
Yeah.
It's real fucking easy to call the plays when your money's not at stake. They show me your fucking trade and how you handled it, and then it would have a little more relevance to me.
Yep.
But I'm showing y'all, I'm being 100% transparent with you guys and showing you how I manage the trades. And it's not always going to work out. It isn't always going to work out, dude. At some point, there's going to be losing trades. I already had him. Remember Neo? Where's Neo? Fucking Neo. I lost money early, dude, early on this trade because I had taken on a big win on SoFi.
Okay.
So I was like, oh shit, tax harvest or whatever. So there was an opportunity with Neo. I want to say the other one was Soxol. I think it was Soxol. Yeah, these two. Look at those big ass losses on paper right now, dude. 298,000 and 232,000. The Tesla one, that's just not real. They're looking at whenever we brought the 6,500 shares over from Robin.
Correct.
So Robin or Tesla was trading at like 400. I ended up selling the shares at like 350, but I didn't buy the shares for 400 and sell them at 350. But that's just the Mickey Mouse accounting that they did whenever we moved those shares over.
So is Soxu and Neo the same way, or is that just
no? Those happened here. That's real.
Oh, okay.
That's as real as it gets. That was me. I pushed a bunch of buttons and got my ass kicked. So it's right there. And I didn't have Neo on the trade until very recently again. But I wanted to put it back on there so that I could remind myself of that shit doesn't always go peachy and creamy. So I created a big ass hole, and eventually I want to crawl out of it, just more so for my ego. But if there's other plays out there where I could just go make the money, it doesn't really matter to me, right? Like
what you did.
I'm not going to punish myself emotionally.
Yeah, and I mean, and you did that, right? You moved on and you made the money elsewhere.
Yeah. So, I mean, obviously, if you look at the But anyway, man, I hope you can appreciate the level of transparency because it's not just one thing to show your P&L and show your year to date. Is you got to give the play-by-play and show people like what's the thought process whenever you got into the strangle to begin with. What's the thought process whenever you chose to roll? Why you chose those strikes? Why you chose to go after all the credits, why you chose to pay a debit, because I think that the management is the key in this whole thing, and it's all situational. It's all on a case-by-case basis. Like I wish that I could just give y'all a cap that was like one size fits all, if you will, right? Mm-hmm. But some people have big fat heads and some people have little heads. So it's going to be very, very difficult to construct a cap that's a one size fits all.
Correct.
There could be a one size fits most. And I guess if you use like some sort of like a material that's stretchy, maybe you can get it to where it's one size fits all or mostly all. But if you're stretching it out so much, it's probably going to be more uncomfortable on the person with the big fat head, right?
Yeah.
So, and that's what wheeling is, man. Like you got to figure out, like some people just wouldn't be comfortable with that Palantir trade right now, and they want to deal with it right here, right now. And I can appreciate that, and I can respect that. I just don't fall into that category because I know that there's just no risk right now of any type of early assignment whatsoever. There's way too much extrinsic value left in it.
Exactly.
That's just the reality of it.
Exactly.
Good. Another one that's just been going absolutely crazy, but we finally got it to where I feel very, very comfortable with it. I'd be a little more comfortable if this thing was at like 70 option on the put. Mm-hmm. So that's my vision for this trade, is to keep rolling and expanding and maybe sitting at like 70 and even 130, because I think you need that type of range with a unicorn type company like Hood.
Let me see your order chain, TJ.
On Hood?
Yes, sir.
Yeah, right. This guy right here. Go ahead.
Oh yeah, you got that 18. Okay, yeah, okay.
Yeah. So I want to keep widening and expanding. I'm in a pretty decent spot with Hood already, but I would like to get it better and more comfortable because there's a lot of extrinsic value there, and I want to position myself to actually capture that delta road. But I'd be more comfortable again, like at 70, because if there's a wide market pullback or something like that, I do think that Hood could find itself at $75 pretty quickly. And I want to already be on the other side of that, if that makes sense, right? I don't want to have to be like, scrambling and trying to reposition. So
when they got earnings on the 30th.
Yeah, they're going to be freaking amazing, I think, dude. I think
go to the trade table real quick.
This guy right here?
Yeah. All right. Open up the 56 day.
Yeah.
Buy that put back in the call. So hit the axe on both sides. So what's your ideal strikes? I just want to see.
Eventually, I'll be outside of the move. I want to be at 70 and 130.
Okay, just sell both of those then. Let me see something. 70 and 130. There you go. You're only giving back $5 per contract. You got 18, so you're still like $13 in, you know. So I mean, something to consider if you want to down the line as it get closer.
I can handle the heat. I'm greedy.
Yeah. but the reason why I was just saying that, so if it's somebody else that can, see, it's you have options. If you feel you're too tight, then reconstruct the trade from the credits that you have. You still have like $13 left, and that's not the end of the world. You can get the 18 back, right?
Yeah.
Because if it move against you, you adjust the tested side until the stock can just give you that side movement, or you can get that contraction. That's all you're waiting for.
Absolutely. And then, guys, this is all situational. Like, I cannot emphasize this enough because I got to run. Your options buying power is a very, very critical component. Like, just while I've been live, I don't know if y'all have like noticed or not, but my options buying power and the stock buying power has decreased by about $300,000 because there's movement, right? There's movement. So you got to keep that in mind. That's like the one metric that I've really gotten better at studying, and Tesla taught me that.
Because that's sizing, man. That comes down to nothing but size, man. You have to make sure that you stay small with positions like that. If you're
look at all those trades I did on Tesla
you can't do it
there.
Yeah,
to get there. It took a while, dude. It took a while, but it's because I was experimenting with stuff to understand it, because the Tasty Trade platform was new to me right at the time, and it's still new to me, relatively speaking. But I'm a lot more comfortable with it. But I was like, okay, I get it. I get it, and it's like what I can do, what I cannot do. I've even gotten some things like concentration risk. When you go super, super heavy on one stock, like I tried to sell more puts at one time on Tesla, and the brokers wouldn't let me do it.
Yeah,
they're like, now there's just too much on this one ticker. Like, go elsewhere, right?
But that's the beauty of it, right? Because they're gonna let you do what you want to do, but they have to manage risk on their side as well, right? So that gives, like you said, that's the beauty of it, because there's really no other platform that you can go to and get that level of trading, without an enormous amount of capital. So, I mean, they got to control risk on their end. And like you said, if the algorithm sees that, it lets you know, and then you just have to make the adjustment right there, being you fix the trade or you add more capital to your account.
Absolutely. See, like on this one here, dude, I'm at 140 and 170. I feel a hell of a lot more comfortable. You follow me? But it's because I didn't go after all the credits when I rolled a couple of days ago. I went after comfort, because the account's it's a different situation, right? And I look at 01, 140 and 170, same thing, right? So I'm only retarded on the big account, just so you know. And then on the smaller account here, 140 and 180. This is how I'm sleeping right now.
Yeah.
So I'm trying to give you all more context that I don't trade all the accounts the same, because the bankroll is a real critical component to this game that we're playing right now.
Yeah, the last one is pretty stable. I mean, you're not using that much buying power on that one. The other three is kind of high though.
Yeah, but hopefully on the next cycle, I'll be able to get it a little bit more
correct,
favorable, if you will. But I want to end on an easy street position. If I can get to the right account, and that is Apple. If I could find Apple, way the hell down here. So here's Apple. So I'm sitting at 195, 135.
Okay.
Pull up the order chain so option can see that there's not a lot going on here.
Yeah. No.
But I've collected a lot of credits, and it's already a pretty nice winning trade.
Yeah.
So these are the things that are keeping me up at night. And I want to share this with you guys, because I feel like as y'all progressing your journeys, you're going to find yourself in these types of situations where something jumps off the page at you.
Mm-hmm.
So this is the most comfortable trade that I have on the books. I feel very, very comfortable at 195 and 235. We closed the order sheet out. It's an 18 delta, a 19 delta, extremely delta. It's about as delta neutral as you can get, right?
Mm-hmm.
And I'm already up $65,000. The out of the money percentage is 81% on the put, 82% on the call. That's where you want to play.
Yeah.
This is where you want to play.
Yeah.
So I've already done some exercises that if I was okay here in the next cycle, giving back some credits on Palantir
Correct.
and adjusting to make it to the finish line, right?
Yes.
Repositioning the goalpost, give $100,000, $150,000 in credits, doesn't matter. Just get there, log in a huge ass win, make $500,000, move on with your life. And if I moved all of that money over to Apple, same thing with Hood. Go make your $300,000, $400,000 on Hood. Move all of that money over to Apple. I wouldn't make as much money, but I would be sleeping a lot better at night, if you will. Even though I'm sleeping pretty good right now, but there's just nothing that I got to go look at because Apple's not likely to go from 215 to 235 overnight, if you will. If I just wanted to have a more steady situation, if you will, like there are companies like Apple that the going's not great, but it's steady. And there's a lot of people, guys, a lot of people. I know 3 of them personally. All they do is strangle Apple for a living.
Yeah.
But they happen to have very, very big bankrolls and they make a lot of steady money and they golf 2 or 3 times a week because they ain't shit to look at.
Yeah.
So what I'm saying is you have to author your life. You have to construct it the way that it makes sense for you.
Yeah.
I'm still here and I like a little bit of the adrenaline. I like a little bit of the rush, if you will, and I can handle the heat, but not everybody's like me, and that's okay.
No.
Do you?
Mm-hmm.
Apple's more your speed or something like PayPal's your speed. I'm very, very comfortable on display too. And it's printed, same as Apple. We look at the order chain.
Mm-hmm.
There's a little bit more activity, but the money's real.
Mm-hmm.
So why not just go heavier on PayPal? Because I had 1,000 contracts at one time.
Okay.
It's because I don't like the risk to the upside on PayPal. Because I feel like PayPal could legit go to $100 in the matter of 1 or 2 sessions.
Mm-hmm.
And now I'm going to be scrambling. You follow me? So that's why I like the situation.
And you know why? You know why, not to cut you off. If you look at go to the trade table on PayPal.
On PayPal? Okay,
and then we're going to go to Apple. So we see the implied volatility over there is not that bad. But let's look at Apple as well. Look at the implied volatility on Apple.
1 second. Let me pull it up. Well, it tells you on the top 21.
No, I'm talking about on the order chain implied. That's the IV. See how low it is? So you're not going to get as much movement. It's only like 28. That's almost close to the spot. So you're not going to get that much movement. And if you notice a lot of stocks like that can pay you well, like Walmart is another one, they don't have as much movement because they pay well dividends.
Yeah.
See what I'm saying? So they kind of stay within a range, but from a strangle perspective, there you go.
So let's finish with my son's account. We've got 3 positions and we're at 21 days out.
Mm-hmm.
And this is the experiment, right? I'm not doing anything.
Yep.
We're gonna try to get to 14 days to expiration because I'm trying to get the account to 100,000. So I'm trying to handle the heat of the fire, right? And I've been monitoring the buying power usage and all that to see what happens. We're at 48% now, so I haven't seen a spike or anything of the sort yet. We're going to monitor this a lot next week, and if I'm able to stay in these trades the week after, so we can really see how this this gamma and everything comes into play towards the end of the towards the end of when you get closer to expiration date. So I'm at 11 and 16 on Clean Spark. Feel pretty good about it. Feel pretty good about it, to be honest with you. I'd actually probably
What
be
about
kind
that
of
call?
go ahead.
The call, you don't want to move that up some?
No, I don't want any. I don't want any stress in this portfolio. And again, right, this is the temperament's different based on your bankroll. This is what I'm trying to show y'all, and this is also my son's account. So there's definitely one account that I'll never blow up. It's going to be my son's account, right? So I don't want to have any issues with this stock. There's a lot of short interest on Clean Spark. I know that it went down a little bit, but this is the kind of stock that could move 20-30% on a given night on whatever news. And I don't want that in my life. I got SoFi 18 and 25. I feel pretty good about it. It does have earnings though. SoFi has earnings in what is it, next week sometime, next Monday, Tuesday, something like that. Y'all notice that I don't keep up to speed as closely as I used to because I don't own shares anymore. And then in phase, we're already on the other side of earnings. So this is the easiest trade that I now have on the books because I took the trade off before earnings. I waited for the dust to settle. And then I was like, well, I'm going to go put the puts at a level that I'd actually probably be okay owning the damn shares as well. And then I was reasonably aggressive with the calls also. But if you look at the extrinsic value, guys, it is 12,550. If I look at I'm pulling it up on my phone. Give me a second. My Wi-Fi is a little bit slow today. So go settings, accounts. So it's almost 92,000. 91.9 is the net lick on the account. And I was trying to get to 100,000 net liquidation value on this cycle right here. So I'm kind of like trying to stay in the fire, if you will, because in a perfect world, we're collecting $653. Next week, it's going to escalate a little bit more, right? But there's other factors that come into play, and I will consider some other short dated trades if the opportunity presents itself. But that's the experiment, is to see if I can handle the heat of the fire and try to get to the account net liquidation value by August the 15th. That's the goal. We'll see how it works out. If it just gets to the point where it's pointless, if you will, like the juice isn't worth the squeeze, then obviously I'll be rolling these out to that expiration date, which is now 56 days, and I'll just be getting more comfortable, right? I'll be doing this kind of stuff. I'll be doing that kind of stuff and just picking up more credits, and it is what it is. But I'm going to try not to do that. I'm going to try to stay in it, and we'll see what happens. So stay tuned. Option, you got anything else, brother? I got to get rocking and rolling.
No, the only thing I say is, like for everyone, just stay small, man. Stay small and stay mechanical, and everything will work out for you.
Yeah, that is crazy right there. Shout out to Yankee Doodle. My goodness, dude. Up $1.6 million in the year I started trading last May. I mean, bro, that's nuts.
I mean, are you up, or did you take the, being up and taking it off is two different things, right?
Yeah.
So you got to lock in those wins, man. Got to lock them in. Don't just let them. Don't be up. Lock it in. Got to lock in them wins.
Yeah, I'm trying to see if I missed anything, because I did notice that whenever I go to the full screen, I lose my little comments. I haven't quite figured that out there, and I can see the comments on the TV over there, but I don't have my glasses on, so I couldn't quite follow them as we went. Goosage, what's up, fellas? TJ, can you please explain Vega? You want to take that one option? Oh, they already did.
Just volatility and contraction. Just volatility is just the contraction of volatility. So you can if you long Vega, that means you want the stock to move up. So you want high vega, you want a high implied volatility, and then if you got high implied volatility, you want a contraction. So mostly when you selling strangles, you short vega, so you plan on a contraction in
So
volatility.
what's better, Thinkorswim or Tasty Trade?
That's not even a question.
I've personally never been on Thinkorswim, but I believe that Tom created both of them.
Yeah,
or Tom and his team. It's not just all Tom, right?
that's not up for debate though.
You have margin, day trading power, and options buying power on the UI.
I don't know what that is.
Well, I mean, on the big account, I have portfolio margin. They're all margin accounts.
Yeah.
On the small account, I don't qualify for portfolio margin because your account has to be over $175,000 and maintain those levels.
I will say this about Thinkorswim: if you are into the charts, that's a good platform for Thinkorswim with the charts.
I sold cover calls on Amazon on 235 expiring September 19th. What should I do now? Roll?
Let's take a look at it, TJ. 235 September 19th.
I feel like, don't I have the same ones? Let me see.
You got a covered call. I don't know. You got a covered call.
Where's Amazon?
But where's your Yankee Doodle? Where's your shares at?
I think you said 235. It's at 231. I don't see where you would roll. I don't see where you would roll.
It depends. I don't know where your shares at. If it's at 231, yeah. In September.
He said his strike was at 235.
Yeah, it's no need. No, he said I sold a covered call, so I was wondering where his shares was at.
Yeah, I'm not sure.
I don't know if he, underwater on the shares. I don't, he could be underwater on the shares, but yeah, I wouldn't roll though. Not with 50-some days left.
Well, and it's out of the money. Like it's not even at your strike price yet. Like I don't even. That's
put
not
up
even
the trade table.
Oh, sorry, that's not even a conversation right now.
Nah. Let's put it on the trade table.
Okay.
The 19th. And you got the 235. So yeah, I mean, you still got you still out of the money. I wouldn't roll right yet.
Yeah.
I wouldn't roll right yet.
I mean, you got $8. You got $8 of extrinsic value.
Yeah, I wouldn't roll right yet. Now with 56 days, where you going? You gonna go to what, the 84 day?
No, we're gonna go January 2026.
Man, that's definitely gonna hurt you. So yeah, man, good.
Remember when I used to do that on the channel?
Depending on, you gotta depend on where your break even is as well. I'm sure you probably took in about $6, $7, $8. So your break even is like 240 something, 242, 240 something. So you're not even at the break even to really roll right now. So yeah, I wouldn't roll.
Yeah, BITX. I love BITX. I wasn't able to. They won't let me do it on Tasty Trade. I don't know why. Maybe because they probably understand the risk with them. I'm not sure.
They got BITO though.
They do have BITO.
Yeah, they got BITO.
Right on. Does option have any social media? No.
No, this my I just come here. That's all I do.
After our call, I built this chart view in my app so you can visualize your profit zones. Super cool. Hey, what's going on, Vince? Do you always close the strangles before the expiration date? I'm rolling the strangles. I'm not legged out of strangles yet. I have closed a couple of cash grab strangles. I did Oscar that comes to mind. Hams was the cash grab strangle, meaning it's not a campaign. I'm just trying to make a certain amount of money and I'm out of there, right? But I didn't leg out independently. I just legged out. I just closed out the whole thing. I opened them together and I closed them together, right? I kept them together. Happy Friday, y'all. Just sold 20 puts on NVO. Highest big pharma IV out there, juicy premiums. Have any of your naked calls gotten wrecked during this endless meltdown? No. TJ, are you playing with fire with those positions? That is definitely
gotta take some risk. Gotta take some risk, bro.
No, I'm saying that's definitely an opinion. It's an opinion. I don't agree with it. It might be in comparison to my risk tolerance, I feel like you're playing with fire with those positions. I think that would be a more accurate statement.
Correct.
But we're not
And
built
you
the
have an
same.
understanding of what you're doing, right?
We're
So
not
that's
we're
different.
not built we're not built the same. He doesn't have the what would I do if shit hits the fan? What positions would I close out to raise buying power, etc. He
Yeah.
doesn't know that we have $5 million on the sidelines ready to funnel over to Tasty Trade if necessary. Again, this is where
Yeah.
it's real hard to make blanket statements like that when you don't know what's going on with this shit. That's why there's a saying that a lot of folks have, and it's called mind your own business. And mind your own business is not let out of mind. That's not what that means. That it's misconstrued by probably broke folk thinking. Mind your own business is tend to your own garden. Like you need to water your garden, fertilize your garden, etc. Because if you're out there looking at the other garden over there, shit might get out of hand over here because you don't know what they got going on over there.
Yeah,
But
definitely.
you can't see all the inner workings of that, if that makes sense, right? That's why rich folks coined that phrase, and I don't consider myself a rich folk because I'm new to making money like this. But it's mind your own business because you don't get to see all of that. I mean, we can only show you the portfolio. I'm not going to sit there and fucking paste the net worth and all the money. I mean, you know what I'm saying? So I appreciate the concern. We got this. We got this.
And add on, man. Instead of just saying something, add on. What can you add on to, help out?
I know you have the capital to get assigned as a man, but be careful. I hear you, and that's fair. That's fair. Has any of your naked calls gotten wrecked? Man, it's the same comment over and over again. Huh? Okay, baby doll. I'll be done in just a second. I gotta feed the dogs as well. How y'all's going? I already answered that one, right? No, not yet. I have had losing positions. I showed them earlier.
I see one with that. I'm gonna tell you.
Neo and Voxel were losers.
You see Nam Tran.
I'm trying to get to it. I hope I haven't. I'm trying to go in order. I haven't skipped anything yet. You see Amazon as interesting, starting put selling or wait a bit and do another stock. Uber. I like Amazon, dude. I think Amazon's going to 300. I think Google's going to 300. So I'm excited about those companies. Yeah. I think that the Uber earnings were nothing short of stellar. Like the Uber earnings were 10 times better than Tesla's earnings. Now Uber might not be getting rewarded right now, stock price wise, because I think they also increased their capex by $10 billion or so. So it's kind of like whenever Facebook was getting punished because Mark Zuckerberg was going to be spending like $10 billion on the metaverse or something like that. The market didn't really like that, and then they kind of like walked that back a little bit, and now, Meta is approaching all-time highs. Got to treat them like campaigns. Roll Palantir in November and adjust to 130 at no cost. That's fair too. Maybe on the next cycle. Right now, I want to let it play out. We got earnings coming up. I want to get the answers to the test. The IV's kind of high because earnings are coming up. So I want to see what it looks like after some of the air gets out of the balloon, if you will.
Yep.
And this again, the buying power is not at risk. There's plenty of extrinsic value. I don't even know the options in the money right this second, right? It was earlier.
And you got like $32, $33 in credit to make an adjustment. So yeah.
So I just again, I'm not a fan. I was before. I'm just not a fan of managing too early and managing too often.
Yeah.
I know I've seen the call. I've seen the little shows, the Tasty Trade shows, or whatever, the Tasty Life shows, where Tom talks about he manages often. So that's how Tom's wired. I'm not wired that way. Like I want to do the least amount of work, make the most amount of money. Like that's my thing. But again, you gotta tend to your own garden. You gotta mind your own business, right? Like that's the way Tom does it. Obviously, I don't have nearly the success that Tom has, so he obviously figured something out that works for his genetic makeup. and it worked extremely, extremely well. I mean, I think they refer to him as the godfather of options. I mean, dude has forgotten more about options than I care to know. TJ, do you have an idea? How do I get an IB overview over all the tickers we used, like seeing on one page every share price, but for IB to filter which tickers are good, bad, and IB relations? I'm not sure if you could do that on Tasty Trade or not.
Well, I mean, is he talking about the IVR? Or yeah, because I mean, with the IVR, that's the main one, and yeah, you can pull your IVR up.
Bar chart's really good, so I think
you can do that. Okay, but you can do your IV and because I use that as well. That last comment, the implied volatility, the historical volatility and the implied volatility. I use that on Tasty Work now. That kind of lets me know, which one is kind of overpriced and which one is kind of, underpriced. And that helps me develop the strategy that I'm going to use. That one right there. So you can set that up on Tasty Works because I have it set up as well.
That's what I keep saying about Palantir too. It's probably just hard to make sense of this price action. But dude, Palantir is a monster, guys. Palantir is a monster. And I'm excited to keep making money with it. I mean, you made $300,000 this year on Palantir, and I don't own one share. So I don't have that stress of, oh, do I need to sell it right now? Do I not need to sell it? Like, this is crazy. Like, I remember I've had all those stresses for the last 5 years now. And I just love this short strangle range game. I call it the range game, the sweet spot trade, because now I'm just like, I'm like getting more familiar with the technicals. I still follow the storylines, the fundamentals of the company, make sure the numbers make some sense and whatnot. And I'm like, it's just a hell of a lot easier to pick a range versus when to buy the shares, when to sell the shares.
Correct.
Just for me. And again, it just suits me. Like I'm learning who I am in the market, if that makes sense. Appreciate that. I love Tesla too, but you're 100% correct. A lot of renting. No way you're losing on Apple anytime in the near future. I'm looking for an overview, Can you talk about your day and swing trading days? What were you feeling waiting for the price action? What did you do? Well, I worked at the oil field. So I didn't have my phone on me. The phone was in the locker and stuff, so I wasn't able to do much. So you just buy it, and then you look up one day, and you're like up quite a bit. It's exciting. If you look like you're down, I just wait. Like sometimes I would be in these trades for 6 months. The one time I was in the trade for 2 years. Yeah. Those damn pot stocks. This is how sophisticated I was. It was Aurora. The name of the company was Aurora.
Yeah.
I was working at the pits in the oil field, and this dude told me about the Aurora stock. So that was just stupid. Dude, I had to hold that damn stock for like 2 years to make any money with it. Time to date. But on the next one, I'll do a episode specifically with him. I gotta finish this up, guys.
Yeah. But one thing, I saw a comment with the guy from SBET, and he was talking about like the premiums were juicy. I don't know if it was a male or a female, but that's my area where I like to play at, right? I like to play with SBETs. I like to play with Coinbase, things of that nature. But what I will say is that you just got to be careful because the bid-ask spreads on those is real wide. So just be kind of careful. But yeah. I do see a future in them treasuries.
Sean owes me dinner. Look at that.
Thanks for helping with Elite.
That is super cool. SBET crazy premium. Yeah, I just that's another one of these new tickers that's gotten a lot of.
I like those treasuries, man. I got another one I've been messing with.
I just don't understand them, bro. I feel like Jesse Dow's been making a shitload of money with them, and I followed him into a couple of plays before.
Yeah.
I just can't. I just did it.
Wave, man. It's a new wave.
It's in my too hard pile. So y'all, some people like, oh my god, he's so reckless over here. There's some shit I just can't wrap my brain around. Bro, I leave it alone. I lost like 100 grand on MSTX a few months ago, maybe a year ago. I don't know how long it was. And I was like, okay, I can't play with this joint. It doesn't. It dude, nothing. And that's because I had made money on MSTX, and I gave it all back and then some.
Okay.
It didn't fit my genetic makeup.
Yeah.
And that's the one thing that I've also learned is not every stock is free.
Nah. For me, I actually just got the shares right now. So I'm with SBET, I just got some shares. So I'm just gonna play that and just let it sit. Cause I try to play for something more so that can happen later on. So at these prices, that could be the one.
On Certified Finest, I think I covered it on a Wheelers. So look at the Wheelers maybe a month or two ago.
Or just keep coming here. I mean, you here, And you can also Tasty Work has some good videos too. So that can kind of help you.
Here's another one here. Where do you want to see the IB ranks to start a position 50, 60, not IB, but IB rank? It just really, really depends for me. I really look at my percentage of premiums. Like if I'm gonna tie up the actual dollar amount the way that I did on Robinhood, like I'm looking to get 40% annualized returns on my capital.
Mm-hmm.
That's just something that I shoot for. 30% bare minimum. I shoot closer to 40%. So I got to get paid for my risk. I got to get paid for the risk that I'm taking, and I know that it's not the same risk on paper because the capital requirement is a lot less on Tasty Trade than it is on Robinhood. But it's the same capital requirement if you're forced to buy those shares down there. Make no mistake about it, right? Mm-hmm. You don't get a discount on the shares. You're going to pay whatever the strike price is, right?
Yeah.
So you need to make sure that you're getting paid proportionately for that risk. Because if I go based on my cap requirement, I mean, my God, you're making a retarded amount of money, an insane amount of money. Your rate of return, but that's just not the way that I look at it. I look at it as I'm going to go buy $1 million worth of this stock,
mm-hmm.
and I'm going to do that for 56 days. I mean, I need to be getting like $80,000 to $100,000 on that trade.
Yeah, and I mean, from what he was saying, is like 50 to 60 with the IVR. I mean, it varies, because your IVR can be high, but you might not be getting paid. So it's like one of those things where you have to look at it all. You can have a low IVR, but your implied volatility is high, and you could be getting paid because it's like two different metrics. So the best scenario is where you have a high IVR, high IV rank, and everything works, great. But you gotta, you have to make the decision based off of, like TJ said, that you're getting paid for the risk.
Yeah. Palantir is back to 159, guys. Just so you know. I'm going to go play golf, so I'm just like looking at the price action one last time to make sure I didn't miss anything. I'm good, dude. There's just nothing to do. There's nothing to do in this portfolio, and sometimes I will end with this option. The hardest thing about selling short strangles for me so far is that there's not a lot of button pushing. There's not a lot of button pushing, dude. There's not a lot to do. Like you sell the put, you sell the call, you collect the premium, and then you're managing it. And it's just, and I've been very methodical with it.
Correct.
And then, dude, there's just not a lot to do.
It's nothing, man. It's really nothing to do.
Like, I go manage a leg at a time here and there. Like occasionally I'll make some moves. But it's the waiting is the hardest part, right? Like the Tom Petty song. Waiting is the hardest part. Anyway, I got to rock and roll. The guy that I'm going to play golf with is messaging me. So
good.
I got to go eat, make sure I don't have anything not undone on my my honey-do list over here. Anyway, TJ the Wheel Deal signing off. As always, Marine Sky, stay blue, stock serene. Peace out. God bless you guys. Option. I appreciate you as always, my friend.
Yes, sir, bro.
Thanks for sharing all the wisdom.
All right. See you later on, man.